evening, all. Ira Epstein with your financial market wrap-up. And this wrap-up is for Tuesday, the 24th of January, 2023, 6:15 or so p.m. in the evening. So, earnings season coming on. You're seeing the Amazon earnings and others as they're coming out and what the markets are trying to do one way or the other. But they'll kick up the stock, but the indexes aren't going anywhere. And I don't know that they're going to just yet. We don't have a lot of news coming out until Thursday. And that's when we get a slew of economic data. And those will probably be market moving numbers that you want to look at. Bonds and notes getting a little bit of a rally here. In Bitcoin, just sitting here at 22.85. The dollar was down, and you have a mixed bag tonight in most of the currency markets. So we look at the S&P, the weekly chart. You're staying over the 18-week average. That part of the market is bullish. When we look at the chart action, if you really took the high to the low here and you put on a Fibonacci number, you'd see that you made about a 2/3 retracement, 50% to 62% in the market. So you're just sitting there, and that's your natural resistance point. The trend is certainly to the upside, and you can see that with here the higher lows and the higher highs. I think the market is caught in a battle between the 200-day average in the gray and the Bollinger Band at the top. If this breaks down, then the 18-day average comes back into play. If you're going to rally here, you got to be able to prove you can get through 4,080, the upper band on that part of it. And in momentum, you're overbought. It is an ugly chart. The trend is up, momentum overbought, you're in resistance points. It's a difficult time with it. Now, in the NASDAQ, they're trying to play a game here. Are they going to be able to get an embedded reading? You can't count today, Wednesday, because the market, we don't know where it's going to finish, but we can certainly go to Tuesday. Both numbers were over 80. We can go to the day before. Both numbers were over 80, not the day before. So tomorrow, which is tonight as I'm talking, for the trade session of Wednesday, if the market closes just like this, you'll have an embedded reading, which then turns me friendly to the market. Now, you'll say, how far can it go? That becomes the issue in front of the FOMC and the Bollinger Band and the 200-day average. Just bringing up a point. Do markets typically embed? They don't. Embedding means that you took the red and the blue numbers and they're going sideways, either over 80 or sideways under 20. I teach it in the Enhanced Bollinger Band course. In the Dow, excuse me, you've had a higher high, lower low, and for all purposes, you've settled in against the 18-day average of closes, void of a trend and void of any momentum moving in the market. In the Russell, you're getting another bullish crossover. Notice how the 18-day average just now got over the gray line, which is the 200-day average. Let me bring it to you alive here. Here you're under it, coming into it, and that's where you close. Now you reopened tonight and you flip-flopped in them. Will it stay that way? Don't know. Depends how the market finishes the day out. The odds favor it will. And if it follows through, then potentially you're looking at the upper band. What's happening here in the Bollinger Bands? Well, you can't count Wednesday because we don't know what it's going to do. Tuesday, both over 80, but not the day before. Oh, they were. So that gives you tomorrow is the key there. Is it going to embed or not? Could get exciting. In the VIX, we're starting to break down. These arrows actually should be pointing down from there and down from there. I just missed doing that. If you hit the lower band at 1818, I would look for the pros to come back into the market and say, I can play that game. Then we get to the bond market. Got overbought, flipped here, and it's still overbought. I view any number in slow stochastics that are above 70 without both numbers going sideways over 80, as I teach in the Enhanced Bollinger Band course. Now you're just in overbought territory. Yes, you have the trend up. What do you want to do with this in front of the FOMC meeting becomes your big question. The 10-year note's opposite. You broke down here. When you break down, it wouldn't surprise me you get to the 18-day average to regroup in that market. In the dollar index, the trend is still to the downside, lower highs, lower lows. We already heard today from Ms. Lagarde where they are staying the path, so they're probably baking in the next rate hike cycle in February for the European Central Bank of 50 point, whereas the U.S. is at 25. And normally when you do something like that, you give the bid to the euro versus the dollar. And you can see the euro did get the bid. It's got an embedded reading, and it's a currency play right now of interest rates. Keep your eye on that. And as long as you keep the red line embedded in the British pound and don't close this under a 79 level, I view this market as a pullback and a bull market that can still move its way towards that 125 level. In Bitcoin, the February Bitcoin, you have an embedded reading. I think the pros are buying this break, still looking for higher prices. And I know a lot of people coming out and saying, there's another crash coming in Bitcoin. And I'm asking why. I just don't know. There's got to be a banking event that's going to create it. Now, I do understand. I was reading an article how inadvertently some of the Federal Home Loan Bank money has ended up supporting banks that, if you will, gave money to these crypto exchanges. So in its own funny way, I guess we're funding that. Does that sound right to you? It does. I don't understand why a Federal Home Loan Bank is doing that. But what happened is they keep expanding out of their what they should be doing. Think of Countrywide. You remember the old mortgage problem company there? That gives you an idea about it. Brent versus WTI crude April. You're having trouble here in the $5.80 to $6 mark difference. The market is overbought. If it embeds, fine, but it is overbought. It could easily give you a correction that starts challenging 85.17 to 83.51. You're already doing it on the reopen tonight, and you're down here to the 100-day average. I hate when you are overbought. You come up to a 100-day average in a Bollinger Band. I'll let you own it. I don't want to own it at that point if I were in it. In the heating oil, are we going to develop an embedded reading? So both numbers are over 80 tonight, but you can't count Wednesday. We don't know where it's going to finish. So I go to Tuesday's action. And Tuesday, both were over 80. I come to the Monday action, both over 80, but not Friday. Therefore, tomorrow's the key in this market. Is it going to embed or not? Markets typically don't like to embed. They'll do just this. They come up to where they could do it and they turn back. We'll see if that's going to be the case. And in the nat gas, what's hurting this market just so much is the fact that we keep looking for a situation in nat gas where the Freeport refinery that caught fire in June, remember that export terminal and all? Well, it's supposed to have come back online already, parts of it. And it keeps getting pushed back. The company keeps filing the papers to be able to do it. And for whatever reason, they're not meeting up to the local codes, or the local code people are dragging their feet. I don't know what the real story is, but that happened again today, and disappointment that now it'll be February. So you try to rally intraday, and it sank back at the end just for that reason. But you have the bearish embedded reading. That rules the day. You'll know something's afoot when the red line closes over 21. That'll tell you that probably that bearish part of it's over. And it is important because overall, prior to this fire, that Freeport terminal, I believe it was 16% of the U.S. exports in LNG. That's really a big number. And put that back in line, and all of a sudden you get some bids that come back into that market. So you put it all together, you try to come up with a game plan, and that's my job with you. You know, one of my favorite things is to create some of these courses for things that you see all the time, but you don't know what to do with them. Outside days, a day where you took out the previous day's high and low. You know how to work with it? Do you know what it's telling you? Is it a continuation pattern? What if that pattern, for whatever reason, gets broken? What does it often mean? How do you recognize it? How do you do things? I created 9 video chapters for you to look at. That's not very many, right? I cover stocks, futures, and ETFs as the examples. I walk you through charts that are current. You're going to get my complete futures research, but I'm going to throw in the ETF research, the morning subscriber videos for free with both of these. So you're going to get that, 2 weeks of it. You're going to get the charting software so you can see what I do, and you do the exact same thing with my charting software. I think that is so important because I make modifications in stochastics and so on. And as a paid subscriber, you know, my paid subscribers, all they have to do is write me. I give them the formula. They go put it into their own service. It'd be a lot to ask me to go into all these different services and write to them. I'll let you do that. I'm not your tech. But you're going to get this, the complete research and the ETF for the qualifying users. You're going to get our charting software. Again, we say qualifying. It means if you were just a subscriber and you quit, I'm not going to give you the research with the course again. All right. If you're a continuing subscriber, you don't need the futures, but you might not have the ETF. I'm going to give you that. If you don't have the Ira chart software, of course I'm going to give you that. But if you just had an example of it, you don't want to subscribe, I don't own that. You know, they're going to control what that can and can't do. So how do you get all this? It's really actually simple. You can either click up here, move your cursor up there, you'll see an icon. You can go to iraepstein.com under education, or you can call my staff and they'll work with you. Regardless, it's an important course because you see these patterns all the time. I'm Ira Epstein. You have yourself a great evening. I'll see you tomorrow.